Welcome to This Week in Money. I'm Jim Goddard. U.S. Global Investors CEO Frank Holmes believes junior gold is the way to go. DollarCollapse.com editor John Rubino warns the next major war will use computers to wreak havoc on our economy. We talk to Frank Holmes right after this.
Randy Elvis Frisky and his Las Vegas show band relive the movie music memories from Blue Hawaii to Viva Las Vegas, in Ladner, Chilliwack, Maple Ridge, Nanaimo, Victoria, Sydney, Courtenay, Campbell River, Surrey, Kelowna. Details at RandyElvisFrisky.com. Welcome to This Week in Money, the source for market opinions. Sitting in for Phil Mackesy, here is Jim Goddard.
My guest is Frank Holmes, CEO of U.S. Global Investors. Today we're going to be talking about junior gold miners and how that just might be the opportunity people should be looking at, since the equity markets right now are in turbulent times. We don't know how big the correction is going to be. But on the other hand, gold has been sitting there since June last year when I had that huge drop. So many people are saying there is so much investment opportunity there that is being ignored because people are obsessed with the growing equity markets. Well, Frank, is that really the case?
Well, I think what's really important is we've always advocated investors, when they look at gold as an asset class, that they have about 10% of their portfolio in gold stocks, and they rebalance each year. And what the studies have shown, even for the past decade, you have an overall portfolio that's ahead. And I think it's remarkable because gold stocks, measured by the big cap gold stocks, are off in the past 3 years over 70%. And still that great run you had from 2001 up to 2009, 2010, was so spectacular when the markets were sloppy, and vice versa. When you have 90% in the S&P, it's far outperformed. So I think it's this 10% discipline is very, very frugal and smart and rational for investors to highly consider.
Some people have said the problem with gold is that it doesn't accrue interest. But I think the interesting thing about gold is that it accrues real value.
Yeah, that's a good statement, and I think for your listeners is that what's one of the key value drivers for bullion in any country's currency is when a government floats a treasury bill and it's less than the inflationary rate. So if you go back and you look at the charts, and you can see since 2001 that Americans have been buying government bonds and treasury bills at a negative real interest rate. So they bought something once 90 days, 3 months, 5 years, 10 years. They kept rolling over, losing money. And any time that's taken place, gold performs exceptionally well. Now, last year, gold started to take it on the chin. In particular, we noticed that the 5-year and 10-year government bonds went from a negative 60 basis points yield to plus 50. So all of a sudden now you're getting this, that the 5-year and 10-year government bonds, they're paying you a higher yield than the CPI number. Inflation went from 2.25% down to 1.5%, and these bond yields rose. Then all of a sudden you get to a positive return. Will it maintain itself in the future? I don't think so. I think as rates have risen, we start to see the economy start to slow down dramatically, concerns across the board about job creation. So rates have now come off. That 10-year bond fund, yield went up to 3%, and now it's down to 2.6. So I think it's easy to see that any type of negative news, that the bond market responds by rates dropping.
That's interesting. We've had massive sell-offs of the U.S. Treasury bills, and even though they say there's quantitative easing and they're tapering on it, when you put together the real numbers, they'll say we're going from 85 billion to 75 billion, maybe 60 billion. I just found out that's reinvested, so that 70 or 60 really is 80 or 90. So the numbers really aren't coming down that much.
Then you're right. And then there's some people, like Mark Faber, believes that it will slow down the economy even more than they anticipate, and they'll end up having to spend $120 billion a month. That's not my job to forecast that, and it's for people much smarter than me. But what I try to do is try to adapt to what markets are saying and doing. And what's interesting is that we had a huge drought in gas prices. And gas prices have literally been rising for the past 18 months, but you wouldn't think so until now all of a sudden, because it's very cold outside throughout all of North America, and natural gas hits $5 an MCF. All of a sudden people wake up to it, but it's had a spectacular climb. The Vancouver Stock Index is correlated with the HUI index, and that's the big cap gold index, and those two fell for almost 3 years. You've had a drought, and what we like to write about is that when you see those long declines for multi-year declines, go back over 30 years of data, they've never happened for 4 or 5 years. It's usually 2 years, and then they get a bounce. 3 years is very rare, and so that's why I wrote a piece in January the 27th, called Why the Recent Lift in Junior Mining Will Likely Continue. Will it take off dramatically up? No, but I think a lot of the negative selling, the emotional dumping has taken place. And the Canadian Venture Index holds about 372 microcapitalized securities. And what's interesting is that it's a very resource-heavy index with more than 80% of the holdings in energy and basic materials. But making up the top 10 in weight are predominantly energy companies, African Oil, which we own, and America Petrogas, and these are companies that I think is important for people to recognize that even the junior oil stocks felt the drought. And we've seen that many of these Colombian oil companies were trading at, for their production, $120,000 a barrel when oil was $90 a barrel in 2007. And today they trade at half of that valuation, even though the price of oil is the same price. So that negativity has not only been with big oil companies that used to trade at 6-7 times cash flow. Pacific Rubino trades at 2 times cash flow. And we think that some of these factors will change this year because they're just so severely oversold.
Is the factor that the U.S. is also becoming more energy self-sufficient ending golden times for overseas oil investments?
No, I don't think so. I think that what's different back in the 70s when oil took off to $80 a barrel is what I like to call the Chindia effect. In China and India, there's some real significant differences. In 1972, China was totally ostracized from the rest of the world and its own decision. And collectively, China and India over only 2% of the global GDP, but they're 40% of the world's population. Today, those two economies are now over 23% of the world's GDP, and still 40% of the world's population. And now we have a new policy in China for the 1.3 billion people that they can have more than one child. That policy is very significant in the next 20 years of accelerating new babies. And today, I was just recently in India, they have 600 million people under the age of 25. That is very, very important to put in consideration because back in the 70s, there was no Facebook. There was no global television networks. Today, they're all wired. They're all hooked up. They all want that great North American dream. And I think that will continue. And that is something that's going to be important for resources. And it wasn't, the EPA in the U.S. was only created in 1974. So it never existed prior to that. So now the cost to explore, to develop or process any commodity has gone up dramatically, and rightfully so for clean air and clean water, but it has gone up dramatically, whereas the world's population has gone up dramatically, and therefore you have to have the commodities to meet those demands. So I think it's for resource investors will continue to have very different types of patterns of trading and opportunities for creating wealth.
They're going to need basic things to construct things. I also just finished doing an interview where they said 3D printers are going to end the need for massive Asian labor. Is that a factor that we have to take a look at?
Well, I'll see that when it happens.
It's so much easier.
I mean, I just find that's difficult to digest.
It's kind of a science fiction thing right now. It could happen, but you don't know.
Well, a lot of people say that about mining too, and they still need human beings.
Yes.
And all they can do with mechanized mining really is do bigger projects. If you have high-grade gold, you still can't use extreme mechanized mining. It's only when you have a big open pit, and you still need human beings to make those tires that cost $40,000 a tire, and you still need human beings to make the caterpillars. And then you need a human being to drive them. So I don't think 3D is going to turn around and wipe out the manufacturing of an airplane, manufacturing of a tractor, a rubber tire, the assembling of those components, and then the operation of those components.
So you just change the kind of factory operation you do. Instead of the little tiny widgets, you make bigger ones.
Well, I think the bigger thing is skill. I think the real issue is the governments have good policies for skill training. And what is the model for teaching people how to become? There's a shortage in North America, and now they make a ton of money. They make a ton of money in the money business if you're a welder. You don't have to have an engineering degree at university. It's just not a weld. Basic plumbing. Those basic skills of training become very valuable for emerging countries.
They always say your best equity, your best plan for the future if you want to be wealthy is education.
Yes, there's no doubt about it, and it's skills that are necessary for building any type of an economy. You need electricians, you need plumbers, you need drivers that are sophisticated with machinery. You have to have that type of training in the school systems. So I think that as you go up that food chain, you're always going to need just a different set of skills. And like we said earlier, the governments have good policies in place to train people so that they have a job, an opportunity.
I know one of the things I was surprised to see in Canada is there's a big shortage of pipeline workers. And as you said, welders. If you know how to pressure weld, you have a job waiting for you. They'll beg to have you come up and do it.
Correct. And one of the big fallacies in North America is they're training every child to become a doctor, a lawyer, an accountant. And they just basically created a shortage of skilled labor.
They make fun of tradespeople. They say you're dumb. My dad was a mechanic. I wouldn't say he was stupid at all.
Not at all. At $40 an hour, it's not bad.
He invents things.
Even better. So it's another derivative. But
he just says they don't make the proper parts, so I will.
Yeah, well, that's wonderful. But I come back on this thought process that just those basic skills are very, very key. And if 3D graphics comes along, well, I know my son is studying graphics and comprehensive 3D printing. He was telling me that is another level of skill learning, and it's just you got his university degree and is in design and art, but it's another level. So you still have to learn those skills. They just don't come in and take over a complete other industry. They make it more sophisticated. They can drive down the costs. But I still think that eventually you still got to find a place for people.
Coming up, more with Frank Holmes on This Week in Money.
Always consult your investment professional before making any investment decision.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're chatting with Frank Holmes, CEO of U.S. Global Investors. Your latest talk on Frank Talk at U.S. Fund talks about the Golden Cross, and you have a chart to explain it as well. So if people want to follow what we're going to discuss right now, go to Frank Talk at U.S. Fund, and the Golden Cross is the latest thing. And I thought it was just a handy title for your article, but you said it goes along with the old saying, the trend is your friend. Please explain.
It does, and basically the 50-day moving average is looking at several weeks. You're talking about trading weeks, about 10 trading weeks, and the 200-day moving average is looking at 10 months. So if when you include, say, usually these models are 50 days, calendars, and when you look at that, you're saying, what is the trend for the past 6 weeks? And how does that compare for the trend for the past 10 months? And when the trend for the past 6 weeks goes above the trend for the past 10 months, it usually carries itself for many quarters, maybe years, that trend could stay in place, where people all of a sudden get more confidence to be investing in an asset class or the overall stock market, etc. Now, the inverse of that's called the death cross, and it's when the 50-day trend goes below the 200-day trend. And what takes place there is that all of a sudden people become hesitant, they doubt, they could go lower, maybe they should wait, and so you start to see bids dry up, and you usually also see increased volatility. As more investors come into a space, there's less volatility. When more investors leave, the volatility picks up. So what we're seeing now is that the volatility of the Vancouver index has basically been in a downtrend, and so it had big spikes in volume, and as it now seems to be all the selling has capitulated, it's come off the bottoms. And what I find is really interesting from a fundamental point of view for your listeners, there's a rational reason for it to rise, is because the cheapest reserves in the world right now are listed. They're not on the ground, they're listed. And when you see resource takeovers for the energy space, they're 80 to 120% premiums. So therefore, they're saying that those reserves that are listed are so much cheaper than them exploring or developing. And the same thing you can see with these gold mines. We just saw Barrick selling some of its gold assets, and I think they sold the Mara gold assets with the mill, etc., but the reserves worked out to close to $50 an ounce. Well, you can go and buy listed companies with millions of ounces for $5 an ounce, $10 an ounce. And I think that selling has all of a sudden gone way below the replacement cost for a lot of these reserves. Moss Lake is a little junior we owned, and we see all of a sudden consolidation there because it was trading at only $3 an ounce of gold. Wow. And you're seeing other people buying other assets for $50. So you have some of these things are just inexpensive, and I think they could be trading higher. What investors will separate the wheat from the chaff will be looking for those companies which have a higher grade and have a footprint of geologically which is close to another mill, another operating sites. And because these other older mines are running out of ore, they're looking around to ship ore into their existing infrastructure that could have cost $300, $400, $500 million, and they must well keep feeding with ore and surrounding properties. Those stock prices are so down and out, and buy them. And I think you can see premiums of 20 to 100%.
These juniors right now, though, somebody was saying again, bargain of the century. Unfortunately, because they've been so underfunded, the companies are just struggling to stay above ground, above the water and breathing. And people are scared to put their money in them. How do you know if that junior company that looks like it's a good opportunity is something that will be around next year or 2 years from now?
Well, it's easy to look at the balance sheet and see what management is spending on the amount of money, and the senior management, are they technically competent? When we go and put a lot of money into a junior company, it's like hiring an employee. You have to make sure they have the right skills to be able to do the job. And I think a lot of these junior companies had poor CEOs. They were there for a job, but they really couldn't do the job. And they just weren't able to maintain the shareholder interest, at the same time the funding that was necessary for the projects. And I think that's a very key part that we see. A lot of these CEOs of these small cap companies do a terrible job in creating liquidity for their company. They don't know most of the buy side analysts. They don't, that is money managers like ourselves, and they don't know a lot of the research analysts. They just really don't know them and to be able to tell their story, and they hope that a drill hole result's going to wake up the world. Well, that's only part of the story. If you have a great drill hole result, you have to be able to communicate it, and a press release just doesn't do that. You have to FaceTime with people, and you have to go on the road and see people, and if you don't go do that, your stock is cratered, even if you're a producer. We saw that with a company called Grand Columbia. The CEO never showed up at meetings, never went out to see people, etc., and the stock continued. Every time they had a delay or disappointment, it was getting exacerbated. They were just knocking it down further and further and further. So finally, management wakes up, the board, and they've hired a new CEO, and the stock has jumped up, 70% from its lows.
I heard sometimes the problem with mining companies is that the boss of the company is a great engineer. He can find value in just about any piece of rock. But as you said, does he know how to manage the wealth? Can he gather the funds that you need to explore and take those out of the ground? And how to encourage people like you to take a look at his stuff? He's great at saying, well, look at this technical paper. But we all know technical papers for most people are probably the most boring thing they'll ever look at.
Correct.
They
totally
can't understand
agree.
it, you know.
But then you get the other person that doesn't really know about mining, that's all lots of flash, that as soon as they raise money, they're flying first class and ordering $200 bottles of wine. I was talking with the CEO of Franco-Nevada and was laughing and chuckling because he flies economy, even though he's worth hundreds of millions of dollars. And he leaves the BMO Resource Conference and likes to go walk up to the first class and see. He says, always shocks him how many of the junior mining companies are up there. They're knocking on his door and other doors looking for money, but they're all flying first class.
Yeah, economy starts at home, right?
Yes, and here's a guy that's a big owner of Franco-Nevada, a committed person, and he says, if I fly first, it's because I've upgraded with my points. And it's just that thought process. So you need a combination of both, a person that understands that value, and if they're not a mining engineer, that they're still frugal. Rob McEwen, there's another guy, he's a very frugal person. He's made hundreds of millions of dollars, but frugal. And so you have to tip your hat to someone like him.
That's how they're going to run their company. That's what they understand. Why waste perfectly good money that we could put back into reinvestment, make the company wealthier, hire more people, help your country grow even. Mm-hmm. But don't spend your money foolishly when you have it, especially when you have it.
Correct. So I think in how people position their story and what they do and how they go out to communicate. I think there's a lot of weakness there. But for your listeners, it's looking for a company that has 4 grams, 5 grams, that has more than 3 million ounces, that as a resource, maybe not proven up for 43-101 on that reserve category, but the resource is reflective of the basic geological structure. It's not half a gram of gold or polymetallic that might have a gram of gold. It's just too complex, too expensive, too much of a risk. So there's been very few high-grade 3 million ounce deposits found, and those that have been taken over, and they end up becoming a conflict zone like Ecuador was for Kinross. And it's just for investors is to say, well, how many ounces do they have? What's the grade? And I think that makes it very simple for you to just turn around and look at that universe of stocks. And there's quite a few. There's at least 30 stocks out there that we think have very attractive footprints. And if they have a high grade, but it's 1 million ounces, that's all. But it's near Red Lakes, another mine that has a mill. Well, guess what? It's a candidate to be swallowed.
You just take a look at what's going on around it.
Yep.
And I've also
very important.
Yeah, and also geopolitical investing. They may have a whole lot of gold, but there's a civil war being fought above it. Mm-hmm. That kind of thing. And
totally, and that's why you see Cisco, Goldcorp going after Cisco. It's a safe jurisdiction. Mining taxes just rose in Mexico. That shocks people, so immediately capital, they're not going to go and expand in Mexico, they're going to come back home.
Yeah, I find that happened in Romania as well. I think a large Canadian gold mine was producing a lot of money for them, so they decided, we're going to tax them at 50%. Well, who's going to do business at that rate?
Mm-hmm. Totally agree.
I call it the eat the rich syndrome. Well, after you've eaten them, where's the money now? I don't think they look ahead to, what's going to happen. It's easy to go and rob the bank today, but if you do it, maybe the bank won't be around tomorrow and won't have anything for anyone ever.
Right.
So now that we know that if you do your research and look around, junior stocks in gold are attractive. Again, though, you said do your research diligently. And perhaps one of the best ways to do that is to take a look at your newsletters and some of the research you've done. Frank, maybe remind us what websites people can go to do that research.
Well, thank you. It's simple, usfunds.com, USFUNDS.com. Think of U.S. money, but it's usfunds.com. And we have the investor alert, we also do a recap for Kitco every week. on their site, but you can come and subscribe and you can get also Frank Talk, where I try to mix in some of the conversations on psychology of money with major trends that are taking place. Like, I think a very compelling piece was PMI, global PMI. And we commented on this months ago that as PMI globally turned positive, then resources started to turn positive, and it was still negative. But in the U.S., the basic materials and energy sectors went up 25% last year. They didn't do so in Canada, but in the U.S. they did. And there's a high correlation. PMI is rising, then you get a snap up in copper, energy, gold, but more so copper, nickel, these other commodities. And now PMI started to get soft. Immediately saw a big sell-off in the cyclical stocks. How long will that last? I don't know. It might last a couple of months, this sort of sell-off, until they get new policies out to stimulate the economy. We believe that any type of sell-off is an opportunity to accumulate your stocks. Now, in the big caps in the U.S., what investors have to recognize is that more and more companies have been buying back stock and increasing the dividend. And if you look at the S&P 500 since 2009, it's actually been shrinking the number of shares outstanding. And that impacts, and the best example for that is what you see with IBM. In 10 years, IBM's revenue is actually down, but on a per-share basis, it's up because they've bought back 50% of their company. We're seeing that Exxon, we're seeing with major oil companies, and one of our favorite investments, which we participate from Ground Floor Pacific Rubiolis, they are now with a 4% dividend, and they're buying back their stock. So you're seeing a real change in the marketplace as people go out and say to themselves, what is better to do with the capital? And the senior executives are saying, if I can't find something in the next 3 months, 6 months, guess what? I'll just buy back. I've got lots of free cash flow. I'll buy back the stock or increase my dividend. And you're seeing new funds being created just to focus on what they call total shareholder yield, and those companies are doing that. And I think it's going to continue.
Frank, thanks a lot for chatting with us.
Excellent. Well, I wish everyone health and prosperity.
Best thing to have. Coming up next, John Rubino on This Week in Money.
Randy Elvis Frisky and his Las Vegas show band relive the movie music memories from Blue Hawaii to Viva Las Vegas, in Ladner, Chilliwack, Maple Ridge, Nanaimo, Victoria, Sydney, Courtenay, Campbell River, Surrey, Kelowna. Details at randyelvisfrisky.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is John Rubino, editor of thedollarcollapse.com, and a new book, The Money Bubble. And anyone who's taking a look at what's happening to world finances right now, especially the Canadian dollar and other currencies, those bubbles are collapsing. Very interesting, John. But today, we're going to be talking about China's cyber war against the rest of the world, or at least the Western world. How they hack into accounts, they try to manipulate your company's information or steal it. And how big of a problem is that, John?
Well, hey, Jim. We have to take a step back to understand the whole cyber war thing, because you need to understand the nature of the Internet. It was originally set up to facilitate communication between scientists, and it was designed with ease of access and convenience in mind rather than security. So as we've built the Internet out, and it's become a global network, we've maintained this focus on ease of use and accessibility, but we've, on that backbone, we have built all of our crucial systems like defense contractors and banking and government agencies, and they're all right there, and they're all fairly easy to hack, because if you've got multiple people using a system with multiple passwords from multiple locations, you only need one weak link in that chain to give you access to the system. And once you're in the system, you can do anything that an authorized user can do, which is to corrupt the information or steal it or crash the system or whatever. So basically, the whole world is wide open right now to good hackers. And for the last few years, because the important stuff mostly resides in the developed world. So the Chinese, among others in the developing world, have had a field day, just breaking into our systems and stealing whatever it is they wanted to steal. And a lot of that is defense-related stuff. There are people who are paying attention to this who think that a lot of China's next generation military gear is basically cloned versions of our top of the line stuff that they were able just to steal the plans for and copy and build. And so that's allowed them to take a quantum leap in military capabilities. And at the same time, the same thing is true with a lot of other important products that are out there, being made by our technology companies or our consumer products companies that in which Chinese or other hackers have gotten into their systems, stolen the plans for new products, and then just duplicated them at home. So it's allowed them to bypass a whole lot of R&D and just go straight to building top-of-the-line stuff with our plans and our designs.
Sure. Well, here in Canada, they arrested a 52-year-old Chinese gentleman in Ottawa under allegations he was trying to acquire the plans for Canada's latest warship.
Yeah.
And Canada makes very good warships, apparently.
Yeah, and that's nothing unusual. Apparently, they've hacked a lot of U.S. defense contractors and gotten similar stuff. And their new state-of-the-art submarines are supposedly designed based on U.S. plans and are as good in a lot of ways as our best subs. So
the Los Angeles class submarine, I think they stole the plans.
Very scary prospect. But of course, we're as we found out in the last few years, the U.S. is, if anything, the biggest cyber criminal out there. We're doing more than China can ever hope to do, I think, just because we have more resources to throw at it. We've got most of the true expert hackers in the world here in the U.S. And we're using them to basically spy on everybody in the world. So there's no doubt that we're stealing commercial and military secrets from other countries. It's just that we have more to be stolen than other countries do. So we're a juicier target, but we're out there stealing all kinds of stuff too. So basically the whole world is spying on each other right now. We're all doing it. We're all doing it with increasing sophistication. And the really scary thing about all this is that it's not just spying. You can sabotage systems as easily as you can spy on them once you're inside. Having stolen a password or installed backdoor software that allow you to access it anytime you want to. And some of the things they've done lately as experiments to see if it was possible include blowing up power plants, poisoning water filtration systems, and wiping out the information on huge, corporate networks. And it turns out that that's all doable once you're in the system. So that in the next conflict, let's say it starts in a military way, maybe between Japan and China and the U.S. and those islands in the South China Sea or whatever, there's going to be a cyber war component to it in which the combatants try to shut down crucial pieces of their enemy's infrastructure.
Well, a perfectly good example of that was in the Gulf War. They had put an infected virus chip in the printers of the computers that ran the Iraqi air defense system. So when the U.S. attacked, the virus was activated, and their anti-aircraft guns didn't work. So, cyber war has happened for real already.
Oh, yeah. And the U.S. and Israel introduced a virus into Iran's nuclear program that destroyed a lot of their centrifuges. In other words, set the program back by a few years. And more sophisticated versions of that virus, are out there just waiting to be deployed if they haven't already been deployed. So this is just the beginning of something that is going to add a new and terrifying dimension to the future conflicts. And there really is no way to know how it's going to play out, except that it's going to come as a surprise. You can't telegraph stuff like this. So it's going to have to come out of nowhere, and it's going to have to be very big to be effective. So, shut down one of the major regional power grids in the U.S.
I was just going to say that. That's one of the fears of smart meters being installed. The smart meters can tell your TV set to turn off because they have a chip that communicates with it. And in California, I guess it's useful. They'll tell your air conditioner to stop because there's a power shortage. Mm-hmm. But what if the enemy just shut down the entire North American power grid?
Yeah. And That sounds crazy, but it's probably within the technical capabilities of the best cyber warfare units out there now. And so this is the kind of thing that we'll find out when it happens. It won't be telegraphed, and we won't know who did it, and we won't even know how it happened. We won't know whether it was an attack or whether it was just another thing that shuts down a power grid, because we get blackouts every once in a while during extreme weather or whatever in North America. And so we won't even know for sure that it was an act of aggression, and we won't know where it came from. But we will know that we don't have any power in Chicago or Toronto or Vancouver or whatever, and that whatever resources that we were hoping to draw from those places in order to use in whatever conflict is going on aren't available anymore.
Well, if you shut down big cities like Toronto and New York, which are the financial centers of both countries, I mean, look what the damage they can do in 3 days. A bad storm shuts down the power system. My God, your bank account could disappear.
Yes.
I mean,
all of that is possible. They can shut down the clearing system in one country's banking system and just and that shuts down the financial system of the country. And to the extent that data is destroyed rather than just power turned off, it could take a really long time to get it back up online, and it could be very hard to figure out who had what and who was doing what and which trades should go through and which trades should be invalidated. It's a nightmare for the people trying to put the pieces back together. And that's what we're looking at. That's another reason that the global financial system is incredibly fragile right now, not just because we have really insane amounts of debt and derivatives that nobody understands but are gargantuan in their gross size.
I think J.P. Morgan had a $35 billion loss in one day because somebody hit the wrong button on their computer.
Oh, yeah. Yeah, stuff like that happens, all the time as a matter of course, these fat finger trades.
Yes.
Where somebody just puts a decimal point in the wrong place and screws up a market for a few hours and costs billions of dollars, and it all has to be reversed out. Well, multiply that by 5 million and spread it across several different countries' financial sectors, and you get the potential for what could happen here. So
I think we should dig up that old Rolodex we threw out because we put everything into our computer. I can't remember the phone numbers of anybody now. I just hit their name on the phone or whatever. And when my phone died the other day, I couldn't call anybody because I didn't know their numbers.
Yeah, I think we're entering a time when hard copy backup is going to become a more reasonable sounding thing than it is now, where you just you print out on paper a lot of the stuff that you need that ordinarily you just expect to be in your phone whenever you go to access it. And that's the kind of thing that we will find out through painful experience is necessary, that we can't trust electronic grids and large computer databases because they don't have any physical reality and they can be wiped out in the blink of an eye.
Well, that's my backup system. I still have my little black book where, being a reporter, you put all your contacts in. I still do that because if a battery dies or your computer decides to short out, you still have your notes. You still have it. But people increasingly have no idea. What is that thing you're doing there? What's that object in your hand? It's a pen. It's called writing.
Coming up, more with John Rubino on This Week in Money.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with John Rubino. John, with the future of all this hacking, governments attacking each other, the Brazilian president, by the way, canceled a trip to Canada because Snowden told them Canada was spying on their mining industry. So spying, we know, has been around since humans were invented. And it's just the future of it. Is it possible to predict, and how could we prevent the damage this could cause? As you said, backup stuff physically or spread it out, or do firewalls even work?
Well, it's easier to attack than defend our systems the way they're set up. So So, firewalls will protect, firewalls are like a bike chain or something like that.
Oh, yeah, we know how well they work.
Yeah, they work against some kid who might want to ride your bike away. But they don't work against a professional bike thief who
with
knows
bolt
exactly
cutters.
how to, And so we'll probably evolve towards a different attitude about privacy and convenience than we have now. Right now we've been lulled into a false sense of security by being able to do our banking online and talk to anybody we want to and say anything we feel like and put anything into emails and stuff like that are just so nice and so convenient, but also expose us to a lot of prying eyes and people who don't have our best interests at heart. So we'll probably go back towards something that is a lot less convenient but more secure.
What about retina scans, things like that?
Yeah, which can also be hacked, but it's liable to be an internet that isn't just one big global system. It will probably compartmentalize.
Well, I know China, who likes to censor everything. One of their big problems trying to stop internet stuff is the internet was also designed for communication after an atomic war. It was designed to find a route to exchange information. So the direction it takes, it may go through Tibet before it gets to Toronto and New York, because it will try to find a way to get through.
Yeah, and that's what makes it so great. It routes around trouble, and so a break in any one part of the system isn't fatal. It just finds a way around. And that makes it harder for censors, of course, which is a good thing, but it also makes it harder to protect your stuff, your important data. And so what's going to happen is we'll figure it out over time, but we'll figure it out via really painful lessons. That's how life works. You really don't sacrifice convenience until you have a very good reason to do so.
I remember an SCTV skit. Yeah, an SCTV skit where they were concerned about cyber security in the future. And so the way that you would process words so other people couldn't steal it, typewriter.
Yeah, so.
Yeah. You only want two people to know carbon paper.
Yeah.
And stuff that people who are under the age of 40 don't even know what it is. Maybe 50 now.
Yeah.
What's carbon paper?
We'll probably return to an age of hard copy in some way, in some circumstances, and so we'll have a hybrid system where some things are electronic and very smooth and convenient and easy, and other things are back to paper or some other variation of hard copy.
Or maybe a blood drop with your DNA in it.
Yeah. There will be some high-tech versions of all of this, and I don't know. It scares me in the short run. Now, I'm mainly a finance guy, not a technology guy, and so to me, this just adds a layer of complexity and risk to what is already an incredibly risky situation out there.
Well, my eyes were opened to the cyber risk. A friend of mine who's a computer repairman showed me a list of things that he came across by accident on the internet on how to control somebody's computer with your telephone, how to hack into, you name it, change passwords, find your credit card. And right now they did that survey about the most popular password. It used to be password. Now it's 1, 2, 3, 4, 5, 6. Very complicated. People don't take it seriously. They don't take cyber security seriously. They don't even have a passcode for their phone.
Mm-hmm. Yeah.
Because it's inconvenient to punch it in every time.
Yeah. No, that's completely true.
Well, I guess until we get a big cyber attack that really, really nails us, the issue is going to be one of those things where they'll say, "Oh, you're just a bunch of computer geeks."
Yeah. Well, that's how people learn and improve. Is we have something happen that is painful enough to get our attention, and then we learn what it is we need to know to avoid that pain in the future. And so this is no different.
Yeah, I call it the railway crossing syndrome, where it's a dangerous railway crossing, but they don't have lights and sidearms that come down. Until, somebody gets killed. Then they put the lights and the alarms and all that stuff in. Yeah.
Well, there's an interesting extension to all this in which, you mentioned being able to take control of people's computers. Well, the newest generation of cars are wired and, very, very technologically advanced and plugged into the internet, and then they get signals and respond to those signals. And now it's possible to hack someone's car, take control of the car, and drive it into a brick wall if you want to, or just stop it if you're law enforcement or whatever. So that's going to add a new dimension to political assassination and corporate crime.
I know that's one
when
of the...
you can kill somebody by taking over their car.
Well, that's one of the theories about the death of investigative reporter Michael Hastings.
Yes.
As his Mercedes went through an intersection at 100 miles an hour.
He's a guy who didn't drink.
Didn't drink?
Supposedly, and sent some emails to some friends of his saying, "Oh, I'm onto something big. If the FBI comes and wants to talk to you, don't say anything." And then the next day, he drives his car at 100 miles an hour into a brick wall. And Google just gives your information to the government.
Well, they do anyway.
Sells it to China or whatever.
It's the law
no
they have to give. I mean, right now, Google and Amazon have to give that information to the government. It's the law.
Yes, they do. Yeah.
Because they wonder how do your medical records in Canada end up at the border. I mean, they're supposed to be confidential. How does a U.S. border agent know about it?
Yeah.
It's scary.
That's all true. So.
Well, I hope we're...
Scary world, Jim.
Yeah, well, but it's been scary since day one. Mm-hmm. Yeah. Thanks a lot, John.
Sure, Jim. Anytime.
Thanks to our guests, Frank Holmes and John Rubino. And thank you for listening. I'm Jim Goddard for Phil Mackesy. We're back next week with more This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.